We are back again. Once again, just finished the gold analysis, but we are back again with them Hollywood trades. All right. Let's get back serious. We are on NASDAQ index. I am not going to look at the other indexes in this one. Indices. I hate that word. But yeah, it's looking fairly simple. It's looking fairly simple. We did break this level right here, and so that is our break and retest level. As we know in the bar method, BARR, break and retest, or what? Or rejection. So we did get a rejection of this high. And so with that being said, after rejection of a high, this is our mother candle. Our low is pretty vulnerable. After you reject a high, your low is pretty vulnerable. And we have a huge, I don't even like marking this because I usually would mark it with one of these, right? But this right here is so flat. I will just mark this. No, I will just mark this as a failed. It's just an inefficiency. It's not supposed to be there. And then this void we closed over should be used as support. But this right here is just a crazy gap right there. And so usually the market is going to want to try to at least collect some orders there. So I do have the idea that this low might be vulnerable. However, we do have a lot of support levels before we even start talking about any of that, we'd have to crack through a lot of support levels. We did turn bearish though on our 4 hour. And so with that bearishness being had, we rejected the highs, and then there's our low vulnerable, and then our bearish mitigation levels, where these mistaken bears that got their wig split may want to get out right there. If they don't, or if we get enough shorts and a lot more entries coming after these bearish closes, or after retesting these breakpoints for the bearish candle situation here, this low and this low would be what you would be looking for, and that would be some really good points. I don't even know how many points is that. We're at 265 down to, at least, we could possibly get like a little 200 handles if we get if we seek the rebalance of this imbalance. And my boy TV, my boy Big Dave, I don't know if you're watching, this is just basically how the candles work. Like, you just use these highs and these lows, right? And you see it rejected this one. This is the whole candle. So it rejected that one. And so our low, the mid, you see it stuck to the midpoint right there. That's why I have that blue dotted line. That's just pretty much how candles work. It's the high, the low, and pretty much the midpoint of the bodies that we're looking at. And so right here, this is an empty body right here, is what I would call it, a naked body. And when you get those, it's just an inefficiency. So definitely any lows on the way to this would definitely be very vulnerable. So that's just what we're looking at. The only place that would stop the descent would be this zone right here, because this is an order block. But I don't expect it, because that daily, this void right here on that daily is just too crazy. It may be very much a target. So until we start getting some more bullishness and some more bigger bullish blocks, it's looking like we are definitely looking bearish for the session in New York, unless we start getting hourly closes over top of this candle and this candle here from here. But I am expecting a dip. But this is our bullish zone. You see it's responding to it. Easy stuff. We keep it really easy and really simple. We did have an imbalance here, but because we also created a bearish imbalance, we have now bearish targeting. This was the first trade opportunity of the session, which was pulling up into this imbalance over top of the high and rejecting. I'm pretty sure if you go to the 5-minute chart, you'll see an entry up in there with bearish closes. After you dip into an hourly or 4-hour imbalance, and then start rejecting back down, you just go to the lower time frame. You'll see some bearish closes. You get in on that opportunity. You target your nearest level, which is here. That would have given you what, 90 something down about 30, 40 handles. Not bad to start the session off with on a Wednesday. Clear support levels. This was a flat bottom right here with these two. And then, as we know, this right here is the daily break level. This was the daily high that got broken right here. And then all of these bearish candles, if we do use this zone of support, it would be there in these bearish candles, plus this imbalance will be our ultimate support. This is some Fibonacci type activity in this whole range. So that would be the Fib retrace as well in that range. As you know, I like to keep my charts clean. But again, here are the volume. This is the volumetric data. I don't have my volumetric data on the right-hand side for my volume profile. I don't really use it in my analysis. It's just a visual there to see zones. When you start using these candle levels properly, you really don't need too many more tools, such as like even volume and stuff, because the candle closes and what happens at the candle levels kind of let you know what's happening. Those other confluences are helpful though. Like this, we have dipped into a retracement range. If we get below that average level is retracement, and then you're coming out of the retracement when this volumetric goes over this average. So these tools kind of exhaust you a bit, trying to interpret them and this and that, because there was divergence here. So we had a hump, then a low, then another rally, which should have given us a higher wave here, but it didn't, meaning that we are possibly most likely going to go into this recession or retracement here. That's pretty much it. I guess we got a little bit of extra time. We can show how that retracement looked on the 5 minute out of that bearish fair value gap there. So basically, on the 5 minute, you got your breaker block right here. So your breaker block is going to be your bearish zone that got disrespected and then got retaken over or reclaimed. So you can say this is it's a reclaimed bearish zone, right? So it's doubly enforced. So you got a bearish candle here, and then you got a bearish candle here. So it's double bearish, right? And so that's why we have a markup called bearish breaker. And that's pretty much it. And that was the bearish breaker, was also that hourly imbalance. So once you got this bearish reaction here, this is your first indication that you may have a play. You see that next candle kind of did some crazy stuff. You would have seen this and been like, whoa, hold on, wait. Because we didn't get a bearish close, right? This low right here was still in control. It was not broken yet. We did have a bullish imbalance there. But once this candle started happening, you could have gotten in. Actually, no, none of this is. That's not right. Why is it like that? Yeah, exactly. Exactly. That's your 2301. Exactly. 301. This was it actually up here. Sorry about that. I'm stuck my levels there. So above this high is what you would have been looking at. That's what I call manipulation right there. This is a manipulation block. It closed over the level as though it was gonna stay up there. And those manipulation block plays are some of the craziest, because it makes bulls get in, and then it instantly uses them as liquidity to pull the price back down. And so that's why we have a markup for that as well, called manipulation. This zone will be used once it closed under that. It just used it right as a zone to get out. There was a small imbalance there, and we expected that because we had the bearish imbalance on the higher time frame. But that's pretty much it. That's just how price works. I always say I love those small imbalances. So it gives you such a quick response instead of having a larger candle body open or naked right there, where you have to go up into the whole thing and then it has to do some weird stuff. But those slivers, as I always say, you hear me say that all the time, those slivers of imbalances are the best entries sometimes if they give you that response like that. And that's pretty much it. I don't really. Wow. Yeah, that's pretty much it for right now. I'm gonna go ahead and take me a nap before market open. I'm gonna be doing some other work anyway, but yeah, that's pretty much it, guys. Go ahead and subscribe to the YouTube. All these updates do go to the YouTube. You can find my Discord link in there. Join that free membership tier on there. And I'm going to say adios for now. Share this with a friend in need of true levels.